Welcome back. I'm Pratap here. Today is 24th November 2023. Today is also end of the week. So I will be generating weekly zones, daily zones, 75 minutes and 15 minutes zones in this video. And also it is an important video. Please do not miss to listen the explanation I am giving for ABFRL trade. And it has given two trades today during the intraday, successful trades. And also few important concepts also, or a few important points also you will be observing during this discussion. So let us quickly analyze the performance of the high liquidity zones generated in our yesterday's report. So we identified only two high liquidity zones from our yesterday's list. One is Ultratech Cement on a daily time frame. So it is a demand zone, stock near the demand zone. So prices are yet to enter into this demand zone. So we did not get the trade. And the second one is ABFRL. It is a 75-minute supply zone. It is a high liquidity 75-minute supply zone. So I am opening in the zone. So it has given two successful trades. The first trade is it has given 6,240 rupees profit, which is 4.69% return on the investment. And the second trade is 9,620 rupees profit, which is 7.23% return on the investment. So how we identified? Because ABFRL is a fresh zone. So what I do, let me clear the chart and I will show you everything from the fresh chart. So a lot of learning is there. Please concentrate, especially those who are improvising. You are looking for improvising your concepts. So you have to concentrate a lot. So let me remove the drawings. So according to our yesterday's report, this is supposed to be our supply zone. This is a 75-minute supply zone. So it looks like it is pierced, right, today? Yes, it is pierced. But before that, you should focus on something else. But before today's data, your zone is supposed to be like this as per yesterday's data. So that means this zone is a fresh zone. Because this is a fresh 75-minute zone, you can directly take an entry in this zone if the risk is within our management level. But is it within our manageable level? No, it is a high risk. So what you have to do, you need to fine tune. How do you fine tune? Because this is a 75 minutes high liquidity zone, always we look for a fresh 15-minute zone inside this. So can we find a 15-minute zone inside this? Let us look into the 15 minutes time frame. Now let us find if there are any 15-minute zones inside this. So we have a 15-minute zone here. We have a ERC candle here, expanded range candle, and then we have two base candles, and then we have a drop candle. But how this zone is there? This is just overlapped. How it is overlapped? Part of this zone is inside the high liquidity zone, and another part of the zone is outside the high liquidity zone. So it is something like this. So where you have to take the entry? See, unless there are price action clues related to entry buffers concepts, otherwise you may not be taking trade on this. Or you can take an aggressive trade, there are any price action clues. Something like price is going, giving lot of rejections from this zone, that way you can take. Our third option is, if this 15 minutes is also high liquidity zone, we will take directly entry inside this. But otherwise, what is the rule? You have to fine tune this zone until the proximal line of this 75 minutes high liquidity zone. This is the rule we have to follow. That is what we followed in many trades and even previously also. Because at present I am not seeing any price action close from this particular zone. So what is the best way? Let price enter into this zone. Which zone? 75 minutes high liquidity zone. So how do you change now? So the entry we have to change like this, reduce, and make sure this is exactly at the same level of. See, now I have fine tuned to this 75-minute zone, this 15-minute zone is exactly at the proximal line. The entry is starting from the proximal line. Let me zoom it to get better clarity. So this is the way we fine tune. Now risk is very, very minimal, small risk. But if price enters into this area, then only we want to take the trade. This is how generally we followed even earlier also. So this is at the 15 minutes level. Or another option is we can look for any 5 minutes better structure is there inside. That is also you can do. Let us look into the 5 minutes time frame. Within that 15 minutes, whether we are able to find anything, let us verify. So we didn't see any 5 minutes level structure here. We are seeing a 5 minute structure outside this 15 minutes. But outside, taking a 5 minute zone directly is a high risky. We don't trade like that. We have seen even in earlier also for daily zones what we did. We went to 75 minutes. Inside 75 minutes, we fine tuned to 15 minutes. We didn't take trades directly 15 minutes. Only two scenarios we have taken directly on 15 minutes, even though if it is not there inside the 75 minutes. One is the 15 minutes is also high liquidity zone, we have accepted. The second one is the 15 minutes should be an aggressive trade supported by some price action close. We always called it as an aggressive trade. Price action close should be supported. And if you take this 5 minutes trade as it is from here, say let me draw. This will be an aggressive trade without support of the price action close. See, we haven't seen any price action close on this zone. See here, look into the action because this is a fresh zone. Prices never first time entered. See how easily the zone is broken. Maybe it has given some resistance for some time. There could be some pending order somewhere here pushed at some extent. But this is only a minimal reward. We don't look for a very, very small reward like 0.1 by 0.1% return or 0.5% return. We don't look for at least a minimum above 2.5% return should be there. That is intraday return. But our average high liquidity zone return for high liquidity zones are most of the times it is around 6% or 6.1%. So these small returns we don't look for. See how easily this zone is broken. This 5 minute zone. If it is supported by some price action close earlier, definitely we would have taken a trade as an aggressive trade. But even this is not qualified for the aggressive trade. So the point I want to tell you, when you are taking trades like that, because there will be so many zones will be there at 5 minutes level and directly with inside 75 minutes. And if you are directly taking trades, they won't work. Those zones may not work. There should be a strong justification to take a trade on these zones. These points you have to understand. That's why I'm showing this particular zone. Same concept we applied earlier for daily demand zones also or daily supply zones also. In daily high liquidity zones, we didn't take trades directly in 15 minutes unless it is an aggressive trade supported by the price action close. Otherwise, what is the rule? Inside daily, always we have to find a fresh 75 minute zone. Exactly the same way, inside 75 minutes high liquidity zone, you have to find a fresh 15 minute zone. Inside 15 you can fine tune to 5 minutes. That is a different story. That is allowed. But directly without fine tuning to 15 minutes, you cannot take an entry on directly on 5 minutes. So this is such kind of zone. You should not take trades on such kind of zones if this 5 minutes is not there inside a 15-minute zone. That is the reason why I am deleting now. So it's not a valid zone. You have seen how easily it is failed. Okay. So this is supposed to be, there is no 15 minutes inside. So directly on 15 minutes, we take an entry here. If prices entered into this. See here today price entered into this zone. Today at 9:15, 15 minutes candle. If anybody wants to avoid exactly at 9:15, still the next candle also you got an entry. Look into the 5 minutes, you get clarity here. Actually, this is not at 9:15. We got the entry on 9:25 candle. After that again 9:30 candle. Two opportunities we got as per the 5 minutes candles point of view. Okay, let us go back to the 15 minutes. So that means we got an entry. But then what about our reward? So look for a 15-minute zone. So we have a rally candle, we have a base candle, again we have a rally candle. So you can draw, this is a 15 minutes demand zone. Actually, it has given two opportunities here. So one opportunity here, in case if you miss, this is another. This is two opportunities for taking the trade, not getting the profits, taking the trades. This is the first one, 9:25 candle or 9:30 candle. Again at 9:40 candle, it reached the target. So within this, how much time? 9:30 to 9:40, it is around 10 minutes, or if you consider 9:25, around 15 minutes time frame. Around 15 minutes time frame, it reached the target and we got a profit of 6,240 rupees. This is the profit it has given, which is 4.69% equivalent. That means close to 4.7% profit it has given in just 15 minutes time period. Okay, after that prices again entered into this, we don't take because it is already tested. So the next time what happened, easily it is broken. That's why always we look for fresh zones inside high liquidity. High liquidity always supports multiple tests. But that multiple test only as per our rule, there should be a fresh 15-minute zone should be there inside 75 high liquidity zone. Or if it is a daily high liquidity zone, inside daily high liquidity, we should find a fresh 75-minute zone. These are all our rules for our strategy for both daily time frame high liquidity and 75 minutes time frame high liquidity. But 15 minutes and 5 minutes we cannot apply this strategy because the time frames are too small to apply the strategy. If your risk management supports, directly you can take the trades. But we should be a little careful because the time frames are small. The lifetime of those high liquidity zones are also small. So you should not forget that point. Okay, now this trade is closed. Then is there any another fresh 15-minute zone is available to take up the second trade? So this is the first 15 minutes. We have a drop, we have a two base candles, again a drop, but we fine tune to the high liquidity zone level. That way we got better reward. We got an entry and also we got reward. And are there any other 5 minutes, 15 minute zone? No, we didn't find any 15 minute zones inside this. Look into all the candles. The structure is not great. There are higher chances that easily it will be broken after this. See, that's why the prices went up after the first test. So easily it went up. But what happened here? Yesterday only I explained bull trap. Do you remember? Exactly. For this zone also there is a bull trap at 5 minutes level, and that 5 minutes bull trap is a high liquidity 5 minutes zone. The 5 minute zone is also high liquidity zone. It is not only a bull trap. Let me show you. Let me go to the 5 minutes. See, the way how I am analyzing, please observe the points exactly the same way you should also look into the system. Now we are at 5 minutes time frame. So look here, we have a drop candle. We have two base candles and then we have another drop candle. Drop, base, drop. You already explained how to draw the zone, distal line and proximal line drawing techniques we learned. Especially the distal line, if we want to place in drop, base, drop, the highest of the base candles and the highest of the leg out candle, whichever is the highest, that should be the distal line. That's why you have to draw the zone like this. Until this leg out candle. This is for distal line placement for supply zones, because this is a 5 minutes supply zone. And see, this is a high liquidity zone, 5 minutes high liquidity zone. See how it is supporting multiple tests. First test, second test, third test came very close but couldn't go. Now again, fourth test. And today, fifth test. So the prices went into this high liquidity 5 minute zone. This high liquidity 5 minute zone is at the distal line of the, exactly at the distal line of the 75 minutes high liquidity supply zone. That means there is a zone confluence between 75 minutes high liquidity zone and 5 minutes high liquidity zone. If lower time frame zone and higher time frame zone are overlapped, that is called zone confluence. Within the same time frame, if they are overlapped, that is called as LOTL. Please understand the difference between LOTL and zone confluence. So this is a zone confluence concept applied. In that zone confluence, the lower time frame is acting as a high liquidity zone. The lower time frame zone is also acting as a bull trap. That's why this is a very high important zone. We should not miss the trade when prices entering into this zone. See, just went a little above. It didn't go deep. See how it pushed the price. And what is the target? Obviously, our target is until 15 minutes zones. So let me open that 15 minutes time frame. See, we have a rally candle, we have a base candle, again we have a rally, expanded range candle as a leg out. So the lowest of in RBR pattern, the lowest of the base candle and the lowest of the leg out is the distal line. Earlier we have seen supply zone, highest of the base candles and highest of the leg out candle. For supply zone, highest value. But demand zone, lowest value. Lowest of the base candle and lowest of the leg out candle. So let me draw the zone here. And this is the demand zone. So when we got the entry at 11:45 minutes, 15 minutes candle, we got the entry. 11:45, 15 minutes candle. And when it reached the target at 14:45, that is 2:45, 15 minutes candle, it reached the target. 14:45, here 11:45. Within 3 hours. In 3 hours, it reached the target. You know how much profit it has given? 9,620 rupees it has given the profit. And which is 7.23% return on the investment. And both the candles together, it is 11.9% return on the investment. That means close to 12% return on the investment, both the trades together. Both the trades together. So it's an excellent trade. But everything is as per our concepts. How institutions are thinking, exactly the same way we are thinking. And we are following their footsteps to get better profits. Here, how our software is helping us? Our software is helping us in identifying the high liquidity zone. After that, the rest of the analysis we are doing manually. That means we did not depend 100% on the software. Software is mainly helping in filtering the stocks, in identifying the high liquidity zones. Then our knowledge on demand and supply zones is only helping in reducing the risk, especially risk management. Depending on the softwares doesn't give you good results. Human intervention is required. That's why we are managing our risk. If you want to manage the risk manually, what you have to do? You have to learn demand and supply zone concepts properly. Without learning properly, and if you are expecting profits, it won't happen. I have seen many people always say, I want entry, I want stop loss, I want target, that's it. Why we should learn? Just provide these things, that is more than enough. That is what they tell. But they forgot the most important point. Markets are dynamic. Markets are always dynamic. They are not static. Your targets will be changing from time to time. Or if your decision making also will change time to time. See, earlier this was our target. Now because a new demand is formed, we changed the target. Now to the new target price is reached. And if you are waiting for the target that is below this demand zone, just ignoring this particular newly created demand zone, and if you are waiting for it, you would not have got profit today. You would have missed your profit because you are waiting for the prices to get into this. So that is the reason why I am saying always markets are dynamic. I think few days back also you have seen prices, instead of reaching into the zone, again turned back, created a new demand, again went up, again created one more demand and went up, and they retraced back to the newly created demand. Immediately we exited. That day we got a very less profit. We didn't get loss, we got less profit. Why? Because markets are dynamic. When they are changing the situation, we are also changing our decision. But if I give you entry, target and stop loss, how do you get the profit? That day you would have got some losses that day. And you may not be knowing where to exit. That's why everybody should learn demand and supply zone concepts properly. Never dependent on the other people. Probably today I will be releasing the last video of our first phase of training program. There I am explaining about why several people fail in stock market. What are the reasons behind that? I have already completed the video recording of that, but I will be posting a little late tonight after posting this video. There I clearly explained the reasons. That's why everybody should understand markets are dynamic, they are not static. If I am giving you all the entry, exit, target, never think that they are fixed always. If you have good knowledge on your subject, time to time, depending on the price actions in the market, you will also change your decision. Otherwise, we would not have got two trades on the same stock today. ABFRL. So both are excellent profits. One trade we got 6,000 plus profit, and another trade we got 9,000 plus profit. So this is about ABFRL. Now I will generate demand and supply zones for weekly, daily, 75 minutes and 15 minutes. What I do, 75 minutes and 15 minutes, I will generate in a separate video. Probably tomorrow I will publish them because it's going to be a length. The biggest problem is if the video length is increasing and YouTube is taking a lot of time for processing the video. Almost 2 hours time it is processing for 2 hour video. If it is a small video, quickly it is processing. So that is the reason why I will publish only weekly and daily in this video. Next video, probably tomorrow, I will publish 15 minutes and 75 minutes. So let's start with the weekly time frame. Entry time frame is weekly. Let us find the stocks which are near to the weekly demand zone. So these 7 stocks are filtered where price closed near to the weekly demand zones. So let me go back. Entry time frame is weekly. Let us find the stocks which are near to the weekly supply zone. So these 2 stocks are filtered. So let me go back. Entry time frame is weekly. Let us find the stocks where price closed inside weekly demand zone. This is the filtered list. Total 22 stocks where price closed inside weekly demand zone. So let's go back. Entry time frame is weekly. Let us find the stocks where price closed inside weekly supply zone. This is the filtered list. Seems many stocks are closed inside weekly supply zone. Total 63 stocks closed inside weekly supply zone. That means next week is very critical. How strong the supplies we need to check in the next week. Depending on that only market direction we can identify. Let us find the tested zones, weekly zones. Entry time frame is weekly. Let us find the tested weekly demand zones during this week. So only 2 weekly demand zones are tested during this week. So let's go back. Entry time frame is weekly. Let us find the tested weekly supply zones. So 13 weekly supply zones are tested during this week. So let's go back. Entry time frame weekly. Let us find newly created weekly demand zones. So these 5 stocks are having newly created weekly demand zones. So let me go back. Entry time frame is weekly. Let us find the stocks having newly created weekly supply zones. So only 1 weekly supply zone is created during this week. So this is about filtered list. Now let me generate all the stocks having weekly demand and supply zones for our reference purpose. Entry time frame is weekly. I'm generating demand and supply zones for all the stocks, weekly demand and supply zones. This is for our reference purpose. I will keep on scrolling this list down. So whichever the stock you want to refer, there you please pause the video. So this is about the complete list of all the demand and supply zones on weekly time frame. Now let us generate demand and supply zones for daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So these 8 stocks are closed near the daily demand zone. We have IEX is there. This is a high liquidity zone. But remember, this is C underscore DZ, but not S underscore DZ. But still you can give priority. And one more ultra cement is there. So these are the 2 high liquidity zones we identified. Stocks near to the daily demand zone. So let's go back. Entry time frame is daily. Let us find the stocks where price closed near daily supply zones. So these are the 8 stocks filtered. We have resistance supply zones, high liquidity zones. Divi slab is there, already tested 4 times, but not at pierced. HDFC Bank is also already tested 4 times, not at pierced. India Cement is a fresh zone, high liquidity zone. So these are the 3 high liquidity supply zones we identified in this list. So let me go back. For entry time frame daily, let us find the stocks where price closed inside the daily demand zone. So total 19 stocks are filtered. So let me go back. Entry time frame is daily. Let us find the stocks where price closed inside daily supply zones. This is the filtered list. So total 30 stocks where price closed inside daily supply zone. Let us find the tested demand and supply zones on daily time frame. Entry time frame is daily. Let us find the tested daily demand zones. So 8 demand zones are tested. So let's go back. Now entry time frame daily. Let us find the tested supply zones, daily supply zones. So total 9 supply zones are tested. So let us find newly created demand and supply zones. Entry time frame is daily. Let us find the newly created demand zones. So these 4 stocks are having newly created demand zones. So let's go back. Entry time frame is daily. Let us find the newly created supply zones, daily supply zones. So these 10 stocks are having newly created daily supply zones. Now I will generate a bullish and bearish setup related stocks for daily time frame. Entry time frame is daily. First, let us generate a bullish setup related stocks. So entry zone is a demand zone, and your trend should be, because this is a daily time frame, monthly trend should be either uptrend or sideways, and weekly trend must be uptrend. And what about price direction? Monthly should travel. We have three conditions. The first condition, monthly should travel from demand zone to supply zone, and weekly price also should travel from demand zone to supply zone. And we are adding one more condition, pierced count should be 0. We don't want pierced zones. Which time frame? Daily. So daily time frame, I am setting the value 0, 0, the pierced count. Now let us generate the list. So we have only 2 bullish setup stocks as per the first report. Now let us generate the second report. So what is the second report says? Monthly price direction should travel from demand zone to all-time high, but weekly, again 2 conditions. The first condition is demand zone to supply zone. Second condition, demand zone to all-time high, that we generate in the next report. So now let us generate the second report. So as per the second report, 7 stocks are filtered. These 7 stocks are supporting bullish setup. If you have any doubt, always look into this search strategy. It will give you clarity. The entry zone is demand zone. Your zone ZV trend means zone violation trend. Monthly time frame, either it is uptrend or sideways. Weekly time frame, it is an uptrend. And look into the price direction. Monthly, it is traveling from demand zone to all-time high. Weekly, it is traveling from demand zone to weekly supply zone. And pierced count we set 0. For which time frame, for which zone we set this pierced count? Demand zone. Because entry zone is the demand zone. So this is the second report. And third report, let's go back. This time what we do for price direction, weekly time frame also traveling from demand zone to all-time high. In that situation, monthly demand zone to all-time high, weekly also demand zone to all-time high. Now we filtered a big list. This is the first page. Let me scroll down. The total 42 stocks are filtered. So based on this list, you have to select your stocks. Maybe if you want only fresh zones related stocks, you can look into that. If you want high liquidity zones, you can look into that. But you have to wait until the prices are reaching into the demand zone. Patiently, you have to wait. Because all these stocks, or majority of these stocks are not near the demand zone. So you have to add them into your watch list. So this is about bullish setup for daily time frame. Now what we do, we will look for a bearish setup for daily time frame. So entry time frame daily, because it is bearish setup, entry zone should be supply zone. Because if it is bearish setup, your monthly trend should be either downtrend or sideways, but weekly trend must be downtrend. And the price direction, we have 3 conditions. So first condition, it should be supply zone to demand zone. Second condition is also weekly, supply zone to demand zone. And pierced count, we already said 0, 0. So now let us filter. We have identified 3 zones, so 3 zones, and these supply zones are high liquidity zones. That is the point you should remember. Sorry, these supply zones are not high liquidity zones. I'm sorry. These supply zones are bearish setup related supply zones. Bearish setup. This is the first report. Now let us look into the second report. What is second report? Your monthly should travel from all-time high to demand zone, weekly supply zone to demand zone. No stocks are available. And third report, weekly is also all-time high to demand zone. Mostly you won't find. So no stocks. So that means we have only 3 stocks supporting bearish setup. You can also look for the other condition. Mostly it won't execute. If there are any all-time low related stocks, that is also you can see. Is there any stock moving from all-time low to supply zone? That way you can check. Or supply zone to all-time low. supply zone to all-time low. But here first condition is supply zone to demand zone. That way you can check. Mostly you won't find in F&O stocks, rarely you find stocks near all-time low. Because most of the F&O stocks are, mostly they are maybe near to the all-time high, but they may not be. Maybe rarely you may find maybe one stock, not more than that. But we will check. Nothing is there. You won't find any all-time low stocks. That's why I'm not checking that condition. But otherwise, this is the filtered list. Now we will generate demand and supply zones for all the stocks for daily time frame for our reference purpose. Entry time frame is daily. I'm generating the complete list of the stocks. So this is for your reference. I keep on scrolling this list. Whichever the stock you want to refer there, you please pause the video and you can study. Keep scrolling. Okay. So this is about the stocks on daily time frame. This is the end of the complete list. I hope this information is useful to you for your further study and analysis. So I will generate 75-minute zones and 15-minute zone in a separate video later, maybe tomorrow. So let us all meet again in our next video. Thank you.